Hey, Kevin here, top 100 financial advisor, best-selling author. We are here to talk about the stock market. Now, the baby's in the other room. She's trying to go to sleep. She's struggling. So I'm trying to be a little quiet as we talk about Facebook. But before we do, make sure that you get a copy of my latest book, From Burning the Blueprint, Rebuilding Black Wall Street After the Century of Silence. It's Black History Month. This book talks about Black history and finance in a way that you have not seen before. So you definitely want to check it out. I'll make sure I put the link in the bio. Alright, or the description, not the bio. Y'all get the point. Alright, so we got to talk about Facebook. Facebook announced earnings today. This is something we talked about. We've been talking about earnings and how I think earnings are going to help the stock market kind of get out of the rut that we were in January. Well, Facebook did not help. Shopify did not help either. But let's focus on Facebook. And we still have Amazon at the end of the week, so we'll see how this goes. I didn't really expect Facebook to not do this well, but you know, there was something, we had a hint last year, and we'll go ahead and get into that. Alright, so Facebook after hours are being stock market closed, and there's like extended after hours trading that can get very volatile. After they announced earnings, Facebook fell 20%. Which is not good. This means that tomorrow morning, should things hold, you will see a significant drop if you own shares of Facebook. Now, it's not necessarily a time to panic or even a time to buy. It's a time to understand and read, which is what I always say. I don't like buying companies based on their earnings. Now, I owned Facebook already. I've had it for years. I've owned Google already. I've had it for years. I wouldn't just jump into it just because of a stock split. I wouldn't just jump into it just because of what happened the prior day. Earnings can always be strange. Sometimes it can be an overreaction, which is what we saw with Netflix. I don't think Netflix should have fell 20%. Should Facebook have fallen 20%? Maybe not 20%. But there are some things that are concerning. So number one, they didn't make as much money as what many expected. That came in below estimates. The other thing that was concerning to me, well, two things really. The first thing is that they saw a drop, or the estimates were lower for average monthly users and average daily users. If people aren't on the app, that's not good for Facebook. Their initial estimates for revenue per user is like $11 or whatever it is for every user that they make money based on how many people are on Instagram, on Facebook, on WhatsApp. That was also lower. That's not good. You're not making as much money as what you used to, and this is your bread and butter. Now, why did they make less money? One of the reasons was a conflict between Facebook and Apple. I keep calling it Facebook. I know it's Meta Platforms. You'll get the point. But Apple came out with a new privacy update. People have been talking about this, the iOS update that alerts people to, hey, this app is tracking you. Do you want them to track you or not? This significantly hurt Facebook. And I did talk about this on a podcast. I think there's always a video about it. I'm sure there's a video about it, but we definitely did talk about this on a podcast. The way that Facebook and a lot of these social media apps work is by tracking your data and information, which in some cases isn't a bad thing, and in other cases it's pretty bad. There is a reason why when you Google something, when you search for something, you start to see those products everywhere you go. That is what made Facebook great in terms of advertising, because even for a small business owner like myself, I do ads every now and then. I say, hey, look, check out my book. Hey, look, check out my free classes. And if you are in an investing group on Facebook, or if you're interested in investing and follow investing pages on Instagram, you can become aware of my courses. You can become aware of my book, which helps me as a small business owner, and I can invest, or I can run an ad campaign based on my personal budget. I don't have tens of millions of dollars to do a national campaign. I can't do that. I do got $1,000. I do got $500. Let me run a campaign on Facebook. So there's a pro and con. You don't want people tracking your data. I don't want to be tracked either. But also, I don't want to advertise to people who don't care about investing either. I need a way to target people to get them to my products and services. So that is how Facebook worked. Now, Apple, when they came out and said, hey, look, we're going to tell people not to track, that makes it harder for Facebook to make money and makes things a little wonky. I don't want to advertise in a place where you can't tell me for fact whether or not these are the right people to target, to go to courses, to go that type of thing. So they lost money, right? Or they didn't make as much money as what they expected. They didn't see the users that they expected to see on the app. That is one of the reasons why it's falling 20%. The other part of this too is that Facebook is in the midst of a shift, and they are spending, and by spending I mean losing money, into their Meta business. They wanted to make that shift, one, because of some real bad headlines and news and shady dealings that they were doing around tracking people and privacy and all that kind of stuff. If they shifted, that's when Mark Zuckerberg came up and said, hey, we're not Facebook anymore, we're Meta. And this is where they made the push to the metaverse, which is a space and a place that everybody is talking about. That was to, one, shift the business away from digital advertising only, which is basically all they did, and switch them into that plus metaverse stuff. Now, the good news is they do have a somewhat of a foothold, but it's not going to be, it's not going to be wide open. There are several companies that are trying to establish their dominance in this space. Microsoft is one of those. One way that Facebook can get into it is the Oculus headset, which I don't have on me. I guess you got one the other day for exercise purposes. But it's really cool. It's a headset. You're in the metaverse. Just hadn't really thought about it that way. You could exercise. You see your instructor, and you do that kind of stuff. Great. They lost $3.3 billion with a B in the previous quarter because they're spending and spending and spending, trying to figure out what works, what doesn't work, and really build out how they're going to build their business in the future and make that shift. Some reports, at least from CNBC earlier today, said it's going to take 15 years to get to what they expect to get to, which tells you two things. Everybody's talking about the metaverse now. It could be a very, very long time before you see it in the way that people are talking about. It might not be a 2022 thing. And that's the light at the end of the tunnel for a meta platforms, Facebook. I'm just keep calling it Facebook because that's what I'm used to. But at the end of the tunnel, I could say I want to buy Facebook because I think in 15 years, they're going to be the major player in the metaverse. Maybe they will, maybe they won't. I can't tell you. That I don't know. I'm a little less confident there than what I am for Microsoft, because Microsoft is more capable and has more experience building hardware and software. Whereas Facebook's core experience and their core, I wouldn't say value, the thing they do very well is building communities, both good and bad, and using that to put out relevant advertising. That's what they're really good at. I don't know if they're great at building hardware and building out all those systems. Now, if you spend $3 billion and you're losing that type of money and spending it over and over again, then you better get good at it. And perhaps that is a strategy. This same strategy is what Amazon used to become Amazon. When they started out in the 90s and early 2000s, they were spending and spending and spending and spending to get to where they are today. So yes, it is possible. That is a light at the end of the tunnel if you want to look at that. But it's gonna be rough tomorrow. I don't know what this is gonna mean for the overall stock market. Facebook is one of the outliers of these big tech names. We talked about, the top 10, Facebook being one of those, and how it's overweight for the entire economy. But Microsoft did well, Apple did well, Google did well, Facebook did not. And is this a trend? We'll see what happens with Amazon at the end of the week. But one of these is not like the others. One of these is not like the others. From a strategic and business side of this, it seems like everybody else controls their own products, their own destiny, whereas Facebook really doesn't. Facebook doesn't really make the computers. Yes, they make the Oculus. They do make that, but that's not their primary business. So they have to rely on iPhone, that built by Apple. They have to rely on Android, built by Google, to have people to get on their app and do whatever it is they want to do. You got to go through somebody to create something and for you to create your business. And that is a hurdle and a concern for Facebook for me. Now, personally, I've owned Facebook for years. Facebook is problematic, but I'm not going to take a tax hit for that, right? And if things change between, maybe now and the end of this year, then I'll consider making a sell depending on how bad or how good things are. But this is not a time for me to recommend or even think about, I'm going to hop into the stock. What I would suggest that you do is read about what happened. Read about what's going on with earnings and see how you feel about the direction the company is going in. I already said I feel like Mark Zuckerberg should step down. I didn't be on the record for that. But as an investor, you want to read and see how you feel about where the company is headed, how the numbers came out, and whether it is a big enough concern for you or it is not. Same thing with Netflix. I would want to read and see what's going on, right? And see if that 20% drop was justified. I don't feel like it, right? That's 20% a day. That's ridiculous. However, read, see what the business is, where the business is going, see what they're saying, and then make your decision from there. Now, last thing that I want to talk about before we go is a question y'all are asking about yesterday's video on Google and whether or not it makes sense to buy before they split or after. So remember, the split is not going to happen until July. I think that date was July 15th. It depends, right? It depends. I think that, well, I'll say this. I'm not sure if there's any reliable data source that says it's better to buy before or after. So if there were, I would have quoted that. Y'all know I love data and information like that. But the way I approach it is, number one, I've been buying and holding Google for a while. I'm going to keep doing that. That's not going to change. But the way that I see it, because it's not going to happen until July, what if? This is a big if, because I don't have a crystal ball and know where the market is going to go between now and February and when the stock splits. But for me, my thought is, if Google continues to grow, I don't want to miss out on this 3 months of growth. So even if I'm not going to own a whole share, that's fine. I'm going to own 20 of them, right? If I buy now and wait until July. So at least for 3 months, assuming the market goes up and assuming Google goes up, at least I capture that 3 months of growth. And then sometime after the split, the stock is going to continue to go. So that's how I personally view it. Again, I don't have any data. There may be data out there that says buy before or after. You got that? Drop it in the comments. But for me, I would like to capture whatever growth I can get, and I'm optimistic about Google. So I think that buying, if you like the company, don't just buy it because I said buy it, but if you like the company, I think buying now is going to give you that 3 months. I think whatever happens right after the split, we've seen that the company does take a dip. You can wait until then if you want to. However, there are two things you want to be aware about. Number one, there's no guarantee that there will be a dip after the stock splits. We don't know that. Number two, the dip that happens may still be higher than what the price is today. So that's something you want to look for too. So for example, I know I don't have a graphic for this type of motion, but let's say stock goes up, it dips, and it continues going up. Well, the dip in July is still higher than what it could be today, assuming that the stock goes up. So there's that. So I believe if you like the company, you invest in the company when you like it, which is now. And then we'll see what happens. But either case, it's a long-term company. It's splitting, again, does not make you or lose you any money. It just changes the way the company looks. It's still valued at the same. The business still stays the same. So those are my thoughts on Facebook, my answer to the Google question that everybody's been asking me. And again, we'll see what happens with Amazon. Amazon has not done well. I don't know what those numbers are going to be. We will find out this week. Be careful. Again, what I don't want you to do either is, not watch this video, which is why you want to hit the subscribe button. Definitely do that. Is to hop into Facebook tomorrow and then drop. And then you're like, oh no, what happened? I lost all my money. Investing is trash. I'm like, well, it was earnings. This is what happens. This is why we talk about it 4 times a year when it happens. And the other thing too is watch out for Amazon. Be very careful. If you are considering investing in Amazon, be careful because earnings is this week and we don't know what is going to happen. It could be very good in the case of Microsoft, or it could be very bad and it could drop like Shopify did, like Meta Platforms, aka Facebook, or like Netflix. I don't know. Maybe I said Netflix twice. I don't know. But in either case, be careful during earnings season. I would not invest in anything based on earnings season within that week because things are very, very strange. But do take the time, read what's going on with the company. Take your time, read about what's going on, and then make an informed decision. If you have any other thoughts and ideas about what should I invest in, what makes sense now, go back and check the videos. We did several videos early in the year about what stocks I like now for inflation, what stocks I like now for rising interest rates. All that stuff is still valid, and a lot of those have done pretty well so far. So make sure you go back and check that. All right, that is it for me. I got a whole lot of work I got to get done. I got to write 2 articles tonight within the next few hours. So check me out on Business Insider and other places as you see these articles about Black History Month, as well as a few investing myths. So what are some big investing myths that you should avoid believing in as an investor, as a new investor? So make sure you check those out. I'll let you know when they come out. But right now I gotta finish writing them. All right, that's it for me. I'll talk to you guys later. Bye.